What is going on, ladies and gentlemen? If it does not say live in the bottom right hand corner of your screen, unfortunately you are watching the recap. Go ahead, click back on the main channel, refresh the page, get on the live stream that is currently live because we got a lot to talk about, baby. We are back in action. Today was an action-packed day. It was crazy. We got a lot to talk about. What's going to happen next in the markets? What's going on with AMC? What's going on with Mullen? All these other stocks that we like to invest in and that we like to put our money to work in. A lot is happening under the surface, and I think we have a little bit more clarity than not what we can expect over the next coming days and coming weeks. A quick look at the futures market. NASDAQ looks like it's up 0.76%, S&P up 0.57%, and the bond market is down just a little bit yet again today. So, futures market. So, it looks exciting. Ready for Moaz. What is going on, brother? You are first, huh? Second, Saeed B. How's it going, baby? Are we locked in? Are we ready to go? I hope you guys are creating your massive portfolios. I hope you guys are killing it as far as buying the dip. Like, this is a huge opportunity that hopefully everyone captures. Let's see Adam Aaron's tweet. Said, inbound tweets ask over and over for a share count. AMC has done a share count 6 times in the past year. We know of 516.8 million AMC shares. Some of you believe the count is much higher. As I've said before, we've seen no reliable info on so-called synthetic or fake shares. Is that the tweet that everyone's talking? It must be the tweet everyone's talking about, okay? Go ahead and retweet that. I think it's interesting for a CEO of any magnitude to address, one, just individual shareholders like Adam Aaron does, but to acknowledge something like that. You know, it's kind of like one of those things, right? You ever had like I want a better example, but you ever had like a girl cheat on you or something, or do something that they didn't want to tell you, but they kind of make hints at it, right? That's kind of what Adam Aaron is doing. Legally, he can't come out and say that, but the fact he addresses it is like kind of acknowledgement. Does that make sense? That's my thought. I mean, that's just what life has kind of showed me. So yeah, we'll see. What is going on, Cheese Chaser, baby, in the building? Are you locked in, brother? Nothing more do I want to see Cheese Chaser and everyone else in here come out of this in 2, 3, 4, 5 years, fucking multi-millionaires. We got this, baby. We got this. Not just AMC, but there's a lot of deals out there, okay? Mr. Simon, baby, yo. The member of the year. Almost a year, too. Wild. I am so pumped up for the rest of the year. AMC is going to rock. GME is going to rock. This market is going to drop like a rock. Man, that could be a rap song. Are you a rapper? Get away from me. That kind of had a jingle to it if you say it fast. I don't know, man. I don't know. That's just what I see. But yeah, essentially, that's something I want to talk about in this video as well, because you know the markets have dropped a lot, and usually if you guys watched the video from earlier, then this might not be new information, but typically when you go into a recession, as long as it's not like a financial crisis, usually you're closer to a bottom than not. Usually once you get into a recession, the markets tend to overshoot. The markets tend to say with COVID or any other recession we've had that it's another depression. It's another essentially lost decade. If it turns out to be anything less than that, the markets tend to rally shortly after a recession. So I don't know. We'll see. We'll see. It could be a depression, though. I'm not going to lie with you guys. I'm not going to lie to you guys, I should say. Price of oil, if that thing stays high, it's not looking so good. You had housing starts today come out down 14%, over 160% down on an annualized basis if you extrapolate that data out. Not good numbers that we've seen. The weekly jobless claims also did rise, which was not so much a good thing. But really, what is happening is really what I've been talking about here on this channel, at least for the past couple of days, about this Fed meeting. Like, even though the Fed sounded bullish, it sounded good, in the moment, there's a big disconnect between the data that we're getting, what the Fed is telling us, and what we should think about all of it, right? And it's going to lead to a policy mistake in a recession. That's what the markets are telling you right now. NASDAQ down 32.44% in 6 months is ridiculous. So the second half of the year, statistically, must be better than the first half. Jennifer Hendricks, what's going on? Stock McLovin. I like it, man. I like it. There's so many deals out there right now. It's so difficult. Like, for the actual long-term portfolio, it's like, man, everything is on sale. It's just all on sale. It's wild. What are you guys buying out there for your long-term stock portfolios, your 401ks that are destroyed? I want to hear it. I want to hear it. And I want to see, why did Mullen go so crazy today? Greetings from Zimbabwe. You're in Zimbabwe? Oh, Russell 2000 membership beacons. Is that it? Is that why Mullen went kind of nutty today? Said AMC. Yeah, that's another one too. 24 the money, low volume sell off today. This is not the bottom in my opinion. VIX still not high enough. See, like, I agree with you in normal normal economics, right? Normal market functions. That's 100% correct. But where we're currently at, the net long exposure is so small because this has been one of the most telegraphed, if not the most telegraphed, declines in the stock market, most telegraphed recession that we've ever seen coming, right? You've never had so many people calling for a recession than now. You've never had that in history. It's never been more telegraphed, right? So a lot of people have decreased their exposures already. Like, hedge fund long exposure is at its lowest levels ever. You've never had less long exposure for hedge funds ever, right? And it says this came out June 14th, which is just wild to even think about. But it says Goldman data shows clients boosting short sales aggressively. I mean, the NASDAQ was down 30% when they were doing this. So it's like this still is not the right move, right? So hedge funds are getting pretty destroyed. But when you don't have that much long exposure, when you have a lot of short positions that are especially concentrated in a lot of stocks, AMC, Affirm, even Square has 10% short interest. Like, why does that stock have 10% short interest? It's wild. So when you're in this kind of situation, it's like buying insurance. Like, you're not going to buy insurance on something that you don't have. Like, if you never drive a car that sits in the driveway, I actually have a car that I rarely ever drive, and I guess I've just forgot to not put insurance on it, so I just don't drive it like that. You don't buy insurance on it, right? It's essentially waste of money. I would much rather put that $150, $200 a month into the stock market, if you know what I mean. But the VIX only tracks the S&P 500 puts and calls, basically the contracts and what's going on with the option chain. So when the VIX is doing its thing and not really breaking out to new all-time highs, it's because we already knew this was coming. there's a lot of cash on the sidelines right now. So there's not a huge need to go out and buy insurance. Like hedge funds, people like that typically don't gamble with options. Like YOLOing in like hedge fund world is like shorting AMC at $11. Like that's like a YOLO. It's not like bet everything on what's going to happen by Friday, right? So when you get these mass sell-offs, it's usually just a lot of shorting and computer trading programs, but not insurance. Puts are insurance on your portfolio. And that's the best way that most people should start trading options, is really just learning how to use insurance, aka puts, in your portfolio. But when there's not a big need for puts, then it doesn't necessarily mean the VIX has to spike. Like the times the VIX spiked the most, COVID, right? Great example. The thing went straight up. And that was basically because it caught everybody off guard. A vast majority of hedge funds had very little insurance. And then boom, one day it's like, damn, these stocks might go to zero. We got to buy insurance. So that's why, the VIX can spike and not spike during certain sell-offs. You're definitely seeing more capitulation with the market breadth at about 95%. So essentially about 95% of stocks are going down and correlating with each other. You even seen oil down today. You've seen pretty much everything down today. I believe there was 4 stocks out of the S&P 500, less than 1% of stocks that were up at one point today and over the last couple of days. Like the hedge fund selling has not been more aggressive, which is absolutely, like, it hasn't been more aggressive ever in the history of anything. So it's kind of wild. We're definitely in unprecedented times, but I know a lot of people point to the VIX, and it's just, it's hard to say that when this has been so televised and it's not something that has caught the markets off guard, if that makes sense. I am the only person with self-directed 401k, Roth IRA, and working on research for 401k LLC. Well, there you go, brother. There you go. But, yeah, see, that's COVID. It just came out of nowhere. People rushed into insurance like nobody's business. But you've just been elevated for a minute. And this has been the longest lasting sell-off, I believe, since 2008, if not worse. I mean, we're selling off faster, and we're not really getting much rally in there. 08 was bad, too. It took like 4 years for 08 to get back to new highs. But it wasn't as aggressive as what we're seeing right now until like this and this. And this is kind of what the markets are going to look like, too. Choo, straight down, slow and steady climb back up. Set SPY to 340. Okay. Well, for a fair value on the S&P 500 to go to 340, let's go ahead and look at earnings for the year. So if we had $215 of EPS on the S&P 500 for 2022, times the average 10-year PE ratio of the S&P 500, that would be about $3,600 or about $363 on the S&P 500, which would be about where we're trading at right now. So it looks like the markets, as of right now, are expecting about $215 of EPS for the S&P for 2022. The EPS for 2021 was about $208. So if we do, let's just do 205 times 16.9, that would put a fair value of the S&P at about $346. So that would be some considerable downside from here. What is that, like 10%, 7%, something like that? Pretty close to that 340. And that would be slightly less earnings on the S&P than what we've seen in 2021. But the wildest thing is, analysts still expect 10% earnings growth for 2022. So there is a big disconnect everywhere you look. It's wild. Like, nobody is on the same page. The Fed ain't on the same page as the markets. Analysts aren't on the same page as the markets. And typically, markets turn out to be right, historically speaking. So, pretty interesting. Hello all, Highway Frog. How are you doing, buddy? My guy, he said VIX to 40. I mean, it's possible, especially when you do start to get the margin calls and the actual liquidations coming in. It's certainly a possibility, no doubt. Like, it's probably gonna happen. We were close even back here in January. But really, when all things are said and done, the VIX is probably going to like 60 when you see that full-on just mass liquidation. And then at that point, it's going to be like, dude, you're down 32.5%. If you get the mass liquidation, the freak out, and the VIX goes to 60, the Nasdaq is going to be down like 55-60% from its highs. And during 2008, the markets did fall about 50. The S&P fell about 55% from the peak to the bottom. So it's possible. It really is. But that would be a shit show like nothing you have ever seen. Yeah, that was a 57% drop from the peak to the trough. Peak to trough. Are we experienced the initial market crash? We are like deep in the market crash. This isn't the initial market crash. This is deep into the market crash. We could certainly go down more, and I think the lowest possible point that we're going to go to is these pre-COVID levels. So I should go ahead and mark this line. This is really what you're faced with as of right now. I don't think the markets are going to go under pre-COVID highs. There's so much money out there. It's not like these companies are all going bankrupt, right? We gotta remember that. But that would still be a drop of about 10.5% from here. But what's gonna happen? It's not gonna be a V-shaped recovery. So, like, even if you haven't bought the dip in any of this, even if you waited until a reversal to buy the dip, yeah, you might lose out on those initial, 3 to 5% gains at the bottom. But it's gonna slowly trend back upwards, and maybe by like out here, when we pull the chart out, we might be up here, 360, 370, 380. You're talking likely May 2023, next year around this time, you're probably going to be hitting new all-time highs. If I were to draw out, just imagine this, right? Actually, let's do it. Let's just imagine here. Right? So let's say the markets continue to go down. Let's say we do go slightly under pre-COVID lows, right after the COVID crash started. Let's say we go to 302 on the S&P. We find support around 300. Maybe that happens by November. And then boom. Let's say from there, we start to slowly uptrend, right? People are like, okay, it's not so bad. We're doing okay. And then, June, July, we're getting back up to highs again. That's potentially what this could look like. Unless fuel prices stay super high and people stop spending money and recession freaks everyone out, then, it could last a little bit longer. But if I were to project out that this is probably what it's going to look like. Maybe not down as far. Maybe, like I said, the 330s. And then just a slower uptrend is possible. I don't know. I think that's kind of my expectation. You might trend sideways down here for a minute and then make that flush down, but Joe Go Mofo, he said, I just want the money, man. Give me the money. I hope you guys are really taking advantage of this, because you do not get buying opportunities like this that often. Win Lambo, man. Dude, my main portfolio, can I tell you guys this, is down like 70%. And I've just been buying. Like, I haven't done too much. I've hit nice trades too. It's wild. Like Affirm, I'm down like 82% on that. It's wild. But I just keep buying, and it keeps going. But it's all right. Are we having fun yet? Yeah, we're just getting destroyed, but it's okay. Same trend line up, peak to follow the same angle. Looks scary. Yeah. It's just going to take a long time. and I wish more people actually talked about it, but you know, the longer a downtrend is, as long as you're not like in your 70s, you're good, right? If you're in your 30s, 40s, 50s, you know, early 60s, you're good. Don't even trip. Don't even trip. This is an opportunity to load up for years, possibly the next year, if not 2 years. Boom, and you slap the ass and go and buy the Lambo, baby, because you'll get rewarded after that. Remember when Adam Aaron wore no shorts? Yeah, that's kind of like the tweet. It's kind of encrypted. You know, it's like, why would you say it? Why would you acknowledge it if it wasn't true? Right? Crazy, huh? My lowest price target for SPY is 316. See, I try to look at it on like an actual fundamental basis. Yes, things can overshoot, but how the algorithms work is essentially that, right? So they can overshoot depending on who's, you know, buying what, how much downside exposure they need to get, you know, puts going into the money, all that good stuff. That works on the same scale as it does like on an individual stock like AMC or an ETF like the S&P 500. But if you actually boil it down to earnings, you know, if we just have last year's earnings, I believe it was 208.50, so we'll just roll with that, times the average P ratio over the last 10 years on the S&P 500, that's a fair value of $352 on the S&P. And now to get a $316 price on the S&P, that's into your COVID crash zone. What would that be? Let's do $195 of earnings on the S&P 500 for 2022. See, that's still 329 on the S&P. That would be the COVID peak before we started to drop. That's wild, actually. $195 of EPS. So let's do like 180. Yeah, and you're going to be so far into recession at that point, it would be wild. Yeah, that's, I mean, $304 would be $180 EPS on the S&P. Call it 185, you're going to be roughly around, 316. But like, if you start to get the multiple expansion, which is what we got last year, right, 2020 and 2021, you had $208.50 of EPS on the S&P in 2021. You times that, let's call it, I believe that the max PE we had was like 21, and there you have it, 437 on the S&P. Maybe it was like 23, something like that was the max PE. Times 23. Yeah, see, that would be $479. Where do we peak out? $478.50 per share. So roughly the markets were at a 23 PE as of last year. That PE ratio has dropped substantially. So if we do, I'm kind of curious where it's like really sitting at right now. I'll look at Yahoo, but do like an, oh, what did I do? Actually, you know what I'll do? I'll just look it up on Yahoo. Okay. I'm gonna quit messing around. It says P ratio 3.83. See, that's not correct, my friend. But yeah, it's roughly like 17 and a half, around that. Oh, I drank all of my dang juice? That's crazy. Yo, Tyler, yes, we are. He says, win electric scooter. Man, I don't know. I don't know. It's bad out here. Biden lets the economy tank, then does a few things before elections to make him look like a hero to win election 2024. Dude, there is no way Democrats are going to win. If Democrats win, like, I am not the guy to say elections are rigged, even though I've seen some really weird shit around that time. My buddy used to work for UPS, and he got called to pick up ballots and transfer them, so I don't know what happened with that, but that's my personal experience, and that was a little bit weird. But no, nobody's happy. Like, he's got the worse approval ratings than Carter. Like, that's not good. That's bad. But I'm sure they'll try to do some things. You know, they'll probably start talking about stimulus checks or something. They're gonna talk about gas checks. Can we place our bets right now? Who wants to bet? Okay. Coming these midterms, they're gonna start talking about stimulus gas checks. That's it. Stock market's gonna rip. No, usually after midterms, it's usually a bullish thing for the markets, typically, but we'll see. I'm calling it though. Gas stimulus checks. Obviously affecting macroeconomic pressures. Yeah, a lot of it is, technicals. You're in like a perfect descending like pattern right now. Like it almost doesn't get more picture perfect. Like there's a lot of bad technical factors that are at play here. Like it doesn't look pretty from a technical standpoint. Not at all. But eventually the markets snap back to reality, and they're going to say, hey, we've done a lot of damage, and maybe these stocks are not this undervalued. Like, that's something to keep in mind as well. Not all stocks are going to recover. So that's the trickiest thing here. And I know 24 The Money just said Carnival Cruise is at COVID lows. Now, if they don't dilute, it could be easy money. Essentially, it could be easy money as long as they don't have to dilute or have to go to like the bond market or somewhere else to finance operations. They will be fine as long as they are free cash flow positive and don't have to finance things. They will be just fine, and that's the same thing for like Square. This is one that I have been buying very heavily over the last couple of days. Specifically, this stock's at $57. Like, it is in its COVID crash, and the revenue has, like, it's a totally different company from what it was back then. They had revenue of $1.3 billion per quarter back then. Now it's at, last quarter was $4 billion, so these companies have changed, some for the better, some for the worse, but if you're buying quality, I think you'll be just fine. Carnival, probably one of those stocks that will be just fine. I don't see cruises going anywhere. I want to go on a cruise. It would probably be Carnival too. So I do like it in the 8s. That's for sure. And I do like AMC at 11. I think there's not that much risk at all, if any, longer term in a stock like that. Yeah, it's wild, dude. Look at that. I bought Carnival at these levels, like in between 7 and 10, and instantly like did very well on this stock, and I ended up selling out in the 20s. But when it gets down to these levels, it's hard not to go shopping for some shit. Okay, like if you have cold feet buying right now, man, I feel bad because I'm buying everything and not having any mercy about it. I will buy every share out there eventually. Give me a couple 100 years. I got you. I think Adam Aaron is a chicken shit. He doesn't have balls. Then again, his attorneys are telling him not to say anything. Hopefully they have something up their sleeves. Well, dude, I'm sure there's a catalyst coming soon. I'm sure they've been, looking at going shopping for some new positions. If they haven't, I'm very disappointed in AMC's management decisions. That's just it. Like, if you're not, dude, buy some Square. Like, buy some it sounds stupid and it sounds totally irrelevant, but technically AMC right now, if they put, let's see, 32 billion divided by 500 million, like, maybe not the best idea out there, right? But if AMC invested like $500 million into Square, they could acquire 1/64th of the company. Like, you're getting very good deals right now. Like, that might not sound like a lot, but that's actually a really big chunk of the company, considering, like, what could happen at some of these companies. So it's a great time to go shopping, and I think that'll ultimately be what Adam Aron and the team is trying to do as of right now. Moas over. It hasn't even started. I love y'all, but man, it has not started yet. Like, me specifically, I've televised this exact scenario playing out. Like, this is what we need. We have to see this happening. Yes, there's going to be pain, but ultimately, is it harder to service a margin call now rather than it was a year ago? And the only answer is yes. You know, you're seeing hedge funds getting blown up. Wait till AMC does pop off. Wait till we get volume that comes back in. There's going to be a lot of people that are in a lot of pain in a very short amount of time. Island Boy goes on a cruise. Man. It's wild. I can't even afford like 10 gallons of gas, bro. This shit's crazy. I'm just playing. It is bad though. It's bad. Michigan gas over $5 a gallon. Whew. Whew. I would really love a Biden statement right now. Just say we're gonna start drilling. That's it. That's all he would have to say to drop the price of oil. They're crazy, man. We're Island Boys. This is the Island Boys live stream now, okay? It's renamed. Can I get a reach around check? Right. Could I just get like $5 million bank? Like, I will double that shit quick. So many opportunities to buy, not enough powder. That's the thing, man. That's the issue. But if you could put, you know, if you make 100,000, you're somehow able to, you know, save 35%, 40%, 50% of that money, and put it in for, say, 2 years. Maybe the downtrend lasts that long. Say you put 70 grand into it or 100,000 into the markets, that could very easily turn into $1 million in the next following years, depending on what you invested in. And that's really what I'm going for. I'm going for the high risk, high reward kind of names. Names people know about that are really undervalued, that have a very large total addressable market. Like the fintechs. I think that's going to be very well. You know, Square, I'm probably going to talk about that stock a lot more. It's like such an easy buy right now. It's ridiculous. You know, PayPal, Square, I like Fubo. These are companies you guys know about, you have used before. Snapchat, everyone knows about Snapchat. Even Polestar, not something a lot of people know about, but I do like that stock. And a couple other names as well, but yeah. Coinbase, a lot of people, if you're an investor, you know about Coinbase. Stocks like that, I think, will last through whatever we're going through and will come out in a much better place. They invested $100 million in AMC. Game over. Let's go, baby. Yeah, that'd be a lot. That'd be good. Yeah, someone needs to come in and take a stake in AMC. We're feeling like left out over here. We need a big stake. We did get Ray Dalio. We did get Citadel that like doubled their net long exposure. We did get the Swiss bank that did buy some more, but you know, we just need a big buy-in, like 100 million. Just give us 100 million, like, you know, Cheese Chaser says. I like that idea. They keep returning borrowed shares that weren't shorted, and that's what dropped the cost to borrow. Correct. it can. What's the cost to borrow sitting at? Because the cost to borrow, the minimums went up, which is something that I like to see more so than not, is the minimums going up, because that's basically showing you that, hey, like, even on the minimum, people still want 10 to 15% to lend out their stock. I think that's more bullish than even watching the cost to borrow max go up. Obviously, you want the cost to borrow max to go up, but I think before the cost to borrow max goes higher, you need to see the minimums and the average go higher as well. So I don't necessarily think it's that, because the shares out on loan have apparently increased by about 5 million shares over the past 7 days, but we'll see. Mullen today, I didn't see anything just besides their addition into the Russell 2000. It could be the initial buy-in process, unless there was a tweet I did not see, but other than that, I don't really think there's anything else. Be joining the Russell 2000 and 3000 indexes on June 27th after the market opens. Okay, yeah, there's that. Yeah, that's pretty much it. Mullen's really in an interesting situation. Their cars look good, technology looks good, but do they have enough capital to start delivering vehicles? Because in the auto industry, it's great when rates are low, but when rates start to go high, it costs a lot of money to manufacture vehicles. And if you can't manufacture vehicles and at least somewhat support your operations, that's where you get into a very slippery slope and, potentially in not such a good situation. But it says 1 gallon of fuel or 1 AMC share. That's tough. Yeah, that is tough. 150 more percent. CCL today will dollar cost out after it goes back up. Just wanted the shares in my portfolio for the cruise perks. Yeah, I've heard a lot of people talk about CCL. I don't know if there's something specific about why people are talking about CCL right now, but I do think it's a good buy relative to where the price is, as long as they don't have to finance debt in the bond markets, because that's going to destroy you. I mean, if you got to go to the bond markets right now, you're not like an Apple, you're getting 5, 10, 15%. You got to pay out on those coupons, and that's what ultimately just killed Revlon. And that's something that was very negative that happened today. Revlon officially declared bankruptcy, so obviously not a good thing. And that's the last thing you want, is more bankruptcies starting to come. But I mean, cruises are on the up and up. It's bullish. It's very, very bullish. Look, this is a chart I could get behind. This is like, yeah, I think I should buy some CCL. I see why you guys are talking about it. It's wild. 5 years, like, dude, yeah, you're doing your thing now, huh? Right, it's super cheap. Yeah, I do like some of those trades on a kind of risk to reward basis, because they are really cheap. There was a couple of them, but yeah, Riot's definitely one of them. Crypto is just, it's so tied to the price of crypto that they're kind of going to trade together to a certain extent. We need Elon or Trump to buy in, then it's over. Wouldn't that be the wildest thing? Like, Trump bought AMC? That would probably make headlines. I don't know, man. I just want someone like that will not help the price of oil go up, because that's what the current, White House is doing. They're encouraging the price of oil to go up. Somebody that maybe, won't cause a recession. I don't think these things are too much to ask. It's wild. Turn off share lending. Yeah, that's probably not a bad idea. Redbox numbers get updated. Yeah, that's what I was going to check. The short, Jesus Christ. Short interest of free float, 225.16%, 4.39 million shares sold short. Cost bar a minimum. These numbers are wild. 901.91%. Cost bar average 1.01 thousand. Cost bar max of 1.04 thousand. That's just ridiculous, man. So many bullish options coming through too. It's wild. It's so wild. Like, you have not seen a sizable put on this stock in a long time. Like, you got a $92,000 put right there. A couple $5 puts as well, but it's all like 100,000 or less. There's a bigger one, 300,000. But a lot of these call positions are like hundreds of thousands of dollars, if not millions of dollars. So it definitely outweighs any of the puts that you're seeing. Specifically, today, $1.01 million call position, $600,000 call position, 200,000, 500,000, 300,000, 300. Jeez, oh my gosh, they're crazy. A $30 put that expired today for $301,000. See, that's why these stocks move up and down so much, and they can just be pushed straight down, is because of those damn close to the money puts. You need to do a SoFi video? I think so. Going to test out some Redbox, but not going to go to buying some more AMC on payday while I can at this price. Yeah, like, the lower a stock goes, the less risky it becomes, and AMC's definitely in that boat of there's a lot more potential reward than potential loss, in my personal opinion. You guys know another one that I really like? I really like ChargePoint and then Blink to kind of hedge it out for the long term. I do. But there's so many other things as well that are just so beaten down that it's hard. It's just really hard right now. It was FUD that the short interest was only 125%. Oh yeah, that was definitely FUD. But I do think Roblox, I always say that Redbox still has more upside to go, and this really just looks like a perfect consolidation phase, call it that, and possibly give you an opportunity to get back into calls for a cheap price. I mean, tomorrow, that's probably what I'll do. I'll probably pick up some July 15th calls. I mean, $15 calls now trading for $55 a piece. Not bad in my personal opinion. I'll figure is approximately 3.9 million. We are working to get this displayed as quickly as possible. Based on this update, figure short interest would be 112% of free flow. It's from Ortex. 3.9 million shares. See, that doesn't make that much sense. Let's see. Yeah, it says 4.39 million. Hold on, let me do that kind of sounds right. 112% of, what did they say, 3.9 divided by 439. Oh, did I do that backwards? I think I did that backwards. 112%. Yeah, I mean, that would be an accurate number. And that's still, I mean, 112% sure is still just nuts. I mean, that's insane. That's GameStop levels, right? GameStop was a little bit more. I think it was like 160. But even 112 is a lot. But I wouldn't go into Redbox with shares, though, be careful of that. I mean, if you want to do that on a intraday trade or something, that's a different scenario. But I think with the options, that's where you get the most risk to reward potential with something like Redbox, because eventually the stock's gonna plummet back to like less than $1. Adam Aaron dropping hints. Yeah, I mean, it's kind of one of those things. If you acknowledge it, then, then why are you acknowledging it? Kind of. Just like the shorts, the whatever he had on, like boxers, like a year ago. Naked shorts. Because, man, you're going to go do an interview with someone and you have boxers on. I don't care who you are. I don't care if you're the richest person in the world. I mean, I think you would think to put, some pants on. Or some sweatpants or something. He said, no, I'm going straight boxers. Don't play with me, bro. Yeah, so we'll see. We'll see. I do like where Redbox is, though. Is CMRA garbage stock? Hate to break it to you, you cannot buy or sell contracts on Redbox. So it's position close only. I don't know what CMRA is, but right now a good rule of thumb. Oh, sell only? Wow. That's wild. Damn, that's sad. I made money off of it. I made a decent amount of money off of it. Got out, figured I could get back in at a cheaper price. Apparently not. But yeah, a good rule of thumb right now, and this might hopefully help you guys make a lot of money on the back end of this, but if you've never heard of the stock, you've never seen anyone use the product or never heard about anyone using the product, it's probably a garbage stock. It's probably a stock you don't want to be involved in, right? If you've been in the markets for years, and I mean, it's okay. I don't know what it's called. You guys probably will because you're probably a lot smarter than me, but it's like if you're an investor, I do this all the time. You look at things differently, right? In different situations. So when I walk around Walmart and I see, hey, like this product is like flying off the shelves, or something else, or people are not going to stores as much, or any little thing that is in my realm of comprehension, I notice it and I take notes of it, right? Like, some people it's different. Girls are different with like baby clothes. Like, I don't pay attention to baby clothes. I got kids, but it's not my forte. I don't know about it. I don't know what's cute. I don't know what's not, right? So I don't pay attention to it. Hopefully you guys get the point of that. But if you're invested at this point, you probably pay attention to things. Like if someone's like, yeah, I charge my car at Charge Point, boom, you heard about it. People are using it. They're telling you about it. Things like that. If you've never heard of, something else that's a stock, it's probably not something that is catching on. It's probably not something that will catch on, essentially. You can always be wrong in that, but that's a good rule of thumb. GameStop equals chicken noodle. Oh, due to the buyout. Yeah, that makes sense. Yeah, that's a tough situation. Playing the game, there is a plan. Time tells no lies. Oh, there's definitely a plan. There's definitely a reason he came out and said that. Like, there's no other way around it. Like, why would you come out and say that? And you know he asked his lawyer first. And Adam Aaron's not going to be the guy that wants to not really like piss off retail investors. That's not the right word, but he's not going to be the guy that shatters everyone's hopes and dreams, even if it, were to be 100% genuine. Like, why would you do that if you were somebody that had stock in your company and you wanted to see your company do well? It's just one of those things. I mean, now if it might be for legal reasons as well, so we gotta keep that in mind. But he says maybe it's just me, but Ford Leaps for January 2024 look mad cheap. That's the problem with Leaps right now. I do own a couple. I do have some Fubo 2024 Leaps. Maybe a couple others. I'm not exactly sure on that. Because if I have confidence, I'll just buy and hold them. But, with longer dated contracts right now, it's possible these stocks trade sideways for a minute. Puts on Zillow and Redfin on open. I think Redfin is already so cheap. Like, I would just be careful betting against Redfin. Essentially, at the same time, like its dollar value is cheap, its market cap is low, and you can only make so much on puts. So you might be better off with something like Zillow. It's possible. Obviously, I'm not like a fortune teller, but I think you might get a better like risk to reward off of Zillow. But I like where your head's at. Maybe the home builders. I think there's a home builder index. That's not the one. Go buy you some Bitcoin. Yeah, I do like cryptos right now. Certainly for the long term. I haven't been buying any just because I think there's so many other stocks that are potential, 10 to 50x stocks in the next 5 to 10 years that are trading so cheap that it doesn't make as much sense. Especially with cryptos. Like, I'm really not touching anything when I buy cryptos besides Ethereum. I want to keep it somewhat safe in the crypto world. You never know what crypto is going to be the next one to go to zero, essentially. But I just don't see the same level of risk to reward. And there's a lot of risk in crypto markets right now, so it like really doesn't make sense to me. But I do like it for diversification purposes. I do like the technology, and ultimately I think it will get down to levels where it does make more sense, But I don't know if we're at that level right now. Like, Ethereum to go to 10,000 would be a 10x from here, which would be a phenomenal return. I mean, 1,000%. That's like what you want. Yeah, I still hold ETC. I don't even want to talk about ETC. That shit is ridiculous. But even to new all-time highs would be a 5x. But it's like, how much time is that going to take for one? And then, is Ethereum likely to 5x faster than Square, for an example? And honestly, I think Square would probably 5x sooner than Ethereum. But that's really a personal opinion thing. That'd be $150 billion market cap. Or even something like Fubo, right? What is Fubo's market cap at now? Like, is stupid low? Is it under 500 million? It's got to be now. I bought more Fubo today as well. $473 million market cap. times 5. Yeah, if Fubo even went back to a $2.3 billion market cap, the stock would 5x. So it's like, you know, I think there's a lot of opportunities in stocks like that. You know, say a 30x. If Fubo's market cap went to 14 billion, which is still relatively small. I mean, let's be real compared to the whole cable just market overall. That would be a 30x at a $14 billion market cap from here. Considering no dilution, consider dilution, and you get a 20x at a $14 billion market cap. That's still insane, and that's still very obtainable, you know, for Fubo, if all things go well. What about EGC? I then forgot I own it. Oh, yeah, dude, that's been something else, man. Agreed. If he is looking out for AMC, he can't want this to happen and would prefer to delay it as long as possible. Maybe. Said most shorts will cover when they reach 10% loss with good risk management practice. Yeah, they should. Essentially, you don't want to, especially not in this market environment where hedge funds are just getting destroyed back to back and getting margin called. The last thing you want are a bunch of hedge funds getting margin called, liquidating off of a good catalyst, you know, comes out for AMC, and essentially being in a situation where that happens. Like, that's the last thing you want. That's not good on a risk management basis, but millennial millionaires are delaying home car purchases due to inflation. Millennial millionaires are temporarily shelving major purchases as interest rates and inflation rise. Inflation rises, according to CNBC's Millionaire Survey. Nearly half of all millennial millionaires say higher borrowing costs are causing them to delay buying a car, and 44% say higher interest rates have caused them to delay purchasing a home. Millennials are 3 times more likely to be cutting back on big purchases compared with their baby boomer counterparts. I'm all about looking at stocks that are year lows and buying leaps, like DraftKings, Riot, Ford, SoFi, SPY, bottom 350. Yeah, I think we might get a short-term bottom, you know, around 360. I think that's a really psychological level. But I think we probably can go under that by the time this thing's said and done. 330 might be the actual bottom. You know, 350, I think that's a good level as well, but I'm not confident that is where the ultimate bottom would be. I think the ultimate bottom comes when the markets realize Fed raising rates into a recession, and then the Fed ultimately U-turns cutting rates. That's going to freak the markets out, and then we're ultimately going to start rallying up because rates are now low again, and companies can start to actually grow a little bit more now. That's when you actually bottom. I don't know if that's end of 2022 or it's more than likely 2023, you know, at some point, maybe halfway through the year. So when the Fed realized they made a mistake and, you know, all that. It does depend on inflation as well, but yeah, I would too. I would if I was a boomer. I would just buy it. Just give it to me. Especially if you've been in the markets for a long time. You're still up a lot. Like, even if you bought the S&P 500 just index or the Nasdaq index, you've done very well. Oh man, if SPY went to 150 to 250, dude, oh my gosh. That would be something on a whole new level of dog shit that we have never seen before. Well, actually, have we seen that before? I know the Nasdaq went down like 70% from 2000 to 2002, but dude, they don't even want you to look that far. SPY going to 200 would be an 89% drop. That would be just something else. I would trip. But yeah, I'm gonna get off of here. And is SoFi profitable yet? No, they are free cash flow positive just by a little bit, but not profitable. But yeah, thank you guys for tuning in. Last look at the futures. Let's get it. Dow is up about 0.5%, S&P up 0.56%, and the Nasdaq up 0.75%. Bond yields ticking down about 0.06%. Oil coming down about 0.5%. So looking decent for tomorrow. We'll see if we can wrap this up with a little bit of a green day, but be careful of those intraday. Just shoo. Oh, everything's okay. Oh no, it's not. That's gonna happen. So yeah, that's it. That's all I got for you guys. Hopefully you guys learned something. Hopefully it was educational, informational, good place to be. Thank you guys for tuning in. Appreciate all of you guys. Get your free stock down below in the description with Webull, Moomoo, and Public. If you guys have not already, it is free $99. Essentially, deposit $100. Get yourself some free stock with Webull, Moomoo, and I believe Public. There's no minimum deposit, so definitely do that if you guys want to get yourself some free money. If you guys want to come trade with me live in real time, link down below in the description as well. We have been just absolutely killing it. We are on a hot streak over there. So yeah, if you guys want to come join that action, link in the description. You guys enjoy the rest of your night, and I will see you tomorrow.